Yeah, I hate to say it, but now is honestly, we're coming off probably the toughest time in the past decade
Hmm.
for, companies looking to raise
Yeah.
funds. It's really tough. And there's several reasons for this. One is so many venture investors have gotten kind of enamored with artificial intelligence that they
Hmm.
are, investing in that, sort of precluding any other kind of area of investment. So that is for sure a thing. And it is crowding out consumer investment. Secondly, I'd say is since the IPO market has been kind of largely closed for the past few years, venture funds that have been around for a while can't get kind of liquidity events to be able to reinvest in other new businesses, and they can't raise new funds. Because of that, it's kind of frozen the market for early stage, investing for a lot of venture funds out there. And then the other thing I'd say is when interest rates started to rise, that put a cap for sure on and slowed down demand in venture investment in total. Now, let me now talk about consumer venture investment. It's actually tougher, and
Right.
unfortunately,
That was
but
just the standard. That was just
that was just
standard
the
VC. And
standard
now,
base
now
case
we're
for
going to double
venture
click even
capital.
more.
Yeah, yeah. So when you look at consumer venture capital, it's even worse, and the reason why is because a lot of venture firms got burned over the past few years investing in things like DTC only businesses, which sounded great because the margins were great, but couldn't scale. Or secondly, like Amazon aggregators. There are a lot of Amazon aggregators out there that have gone by the wayside. And then also even like social influencer brands. Social influencer brands are really hit or miss. And so, if you pick the right one, it can be great, but many kind of got burned on picking the wrong one. So, I would say that's sort of the negative kind of case on where we currently are from an investment standpoint. That said, venture funds that are focused on consumer and still focused on consumer, it's a really good time to be putting money to work. There's still over 30,000 consumer companies being founded each year. So there's tons of companies being founded. And there's a lot of great companies out there that are having a hard time getting funding. And then, putting aside all that nonsense and everything else, there are some consumer businesses out there right now that are raising funds that are going to be home run successes. And, if you look back through history, many of the biggest and best consumer brands were actually founded during major economic upheaval times. So, look at Apple, for instance, look at like Procter and Gamble. There's so many that fit that bill. And I think this could be another of those times where, these companies are being stressed in a tough fundraising environment, but they're going to come out way, way stronger.
Well, Carl, yeah.